fears about the Omicron coronavirus variant spread, but what do we actually know? That's our main story. Also today, travel and real estate stocks dumped, corporate profits surged thanks to government largesse, and Pizza Hut's plans to take on Domino's. It's Tuesday, the 30th of November 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Jane Herdlicker, CEO of Virgin Australia, who has, I reckon, one of the toughest jobs in business. But first, Sean, it's all about Omicron this morning. That's, of course, the new variant of the coronavirus, which over the weekend, the World Health Organization called a variant of concern. What did we learn yesterday?
Well, the government's worried about it, no doubt. Federal Health Minister Greg Hunt said the vaccine booster program could be sped up as a result of Omicron. He's asked the Australian Technical Advisory Group on Immunisation to review settings for booster shots. Currently, they fall due 6 months after the second jab, and 1,415,000 people have already had a third injection, but the inference from Mr Hunt is that that will be speeded up. Emergency National Cabinet talks are expected today, while tomorrow's reopening of the international border for fully vaccinated students and skilled workers has been pushed back until December 15 at the earliest. There's no talk of increasing domestic restrictions yet, though some states are reconsidering international arrivals. There are now 5 confirmed cases in the country, 4 in New South Wales from people who have recently arrived from Southern Africa, and 1 in the Northern Territory in the Howard Springs quarantine facility. So far, it seems that Omicron is more transmissible than previous forms of coronavirus, but less severe. Having said that, Commonwealth Chief Health Officer Paul Kelly said little was known about the variant. He pointed out that last Thursday, no one had even heard of the variant. The government has been in talks with both Pfizer and Moderna about adapting their vaccines. Mind you, they may already work against it. We just don't know.
And meanwhile, Sean, in Victoria, the recent protest marches have triggered at least 19 cases of COVID.
Yes, and 16 of those people were unvaccinated. It totally defeats me why you'd put yourself at such risk at a mass rally when you're unvaccinated. Of the other 3, 2 were partially vaccinated and 1 was fully vaccinated. Victoria yesterday recorded just over 1,000 cases of COVID-19 and 3 deaths. New South Wales recorded 150 new cases and no deaths. That state has a vaccination rate of 92% for people aged 16 years and over. And the ACT said there were 7 new cases recorded yesterday. The Territory's vaccination rate, Michael, is now almost 98%, and that's for people aged 12 and over.
That is really quite extraordinary, isn't it?
Sure is.
Now, really though, Sean, everyone's wondering whether we're now heading towards more restrictions, given there has been so much noise now in the last few days about Omicron.
It would be a very courageous government to reinstitute full lockdowns or even severe restrictions as we head into the holiday season. That's the first thing I'd say. And of course, there's a federal election less than 6 months away, so the Morrison government will be very, very careful how this is treated. A couple of things suggest we won't end up there. First, so many Australians are now vaccinated. Second, the severity of the illness so far is far less than other variants. Third, most of the country, Western Australia being the obvious exception, has decided to live with COVID rather than aim for a zero tolerance policy. And fourth, we're just much better at treating the coronavirus. But until we know more about it, we just don't know.
Now, there had been widespread expectations of a pretty severe plunge yesterday on the markets. How did the local markets perform?
Well, it wasn't quite as bad as predicted. The S&P ASX 200 closed the day down 0.5%, having fallen by more than 1% in early trading, only to recover as the day wore on. Remember, that's after Friday's 1.6% fall, so in 2 sessions it's down more than 2%. Bond yields fell as investors, worried about an economic slowdown, bought into the safe fixed interest assets. There was some serious selling in some sectors. Shopping centres, for example, and of course the travel companies. Vicinity centres fell nearly 5%, Scentre Group was off nearly 4%, and GPT Group was down more than 3%. But the worst was European-based, but ASX-listed, Unibail Rodamco Westfield, which ended more than 6% lower. Among the travel stocks, Sydney Airport and Qantas both dropped more than 2%. Corporate Travel Management and Webjet were down 2.4% and 2.8% respectively. Graham Turner, the boss of Flight Centre, said he hoped decisions about Omicron are based on science, not emotions, adding that his team in South Africa had indicated that the global reaction to Omicron so far was something of an overreaction. Flight Centre share price yesterday ended down 0.9%. All in all, not too bad, really.
Yeah, and what happened overnight in overseas markets?
Well, Michael, the big news was that Jack Dorsey, the co-founder and boss of Twitter, tweeted he's resigning, effective immediately. Rumours of his resignation sent Twitter's share price up more than 10% in pre-market trading, and then it dropped by just as much when it was confirmed. Mr. Dorsey has been criticised for doing too much. He also runs payment system Square. He said it was his own decision to step down. Away from Twitter, it was a strong night on Wall Street with investors acting more calmly about the Omicron variant. Tech stocks led the way with the Nasdaq up 2% in early afternoon trading, while the Dow Jones Industrial Average and S&P 500 were also higher. In Europe, inflation in Germany during November jumped 6%, its highest level since 1992. That ups the pressure on the European Central Bank to lift interest rates. European markets were also higher, led by the UK's FTSE, which was up nearly 1%. The Aussie dollar is buying 71.3 US cents. Oil prices rose overnight while gold was lower.
We'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around this morning. With national accounts figures due out tomorrow, some of the final pieces to the economic puzzle are really being put into place, with company profits rising 4% during the September quarter.
Yes, and in no small part thanks to government handouts. Keep in mind that much of the East Coast was closed down for at least part of that quarter, yet profits rose. In fact, they hit a record. Shows just how powerful government support has been. Look a bit closer, and construction did really well. So too many white-collar professions, but administrative and support services, along with financial services, transport and hospitality sectors, they all didn't do so well. According to the Bureau of Statistics, wages and salaries fell by 0.8% during the September quarter, while inventories dropped 1.9%, which was much more than expected. Now, all these figures feed into the economic growth data for the September quarter, which is due for release tomorrow. Consensus among economists is that it will come in around minus 2.5%.
Now, Sean, if you happen to have a calendar handy, if anyone actually still uses a paper calendar, pull it out now and circle the month of May for next year, because it's looking increasingly likely that there will be a May federal election.
Yes, it does. The government yesterday released details of parliamentary sitting days and the parliamentary calendar more generally for next year, and it's penciled in a March 29 budget. Now, the federal government has never delivered a budget in March. Normally, they're in May. But Prime Minister Scott Morrison wants to hand down a budget before calling the next election. So, reading the tea leaves, the most likely dates for a federal election next year are mid to late May. That's exactly the same pattern as in 2019 when the Prime Minister handed down a 2 April budget before heading to the election on the 18th of May, an election no one expected him to win, but he did.
It is going to be a long 6 months, isn't it?
It is, definitely.
Now, I mentioned this one at the top of the show. Pizza Hut wants to double its outlets to more than 500 stores within 4 years, and it's on target to lift sales 25% this year.
Yes, but I must say it shows how well Domino's has done in Australia when Pizza Hut, which is the number 2 player, has lifted its market share from 7 to just 9% in 18 months. Now, admittedly, it's a very fragmented market, but 9% isn't that high a market share for a number 2 player. Pizza Hut Chief Executive Phil Reid expects to lift sales this year to $240 million. The group currently has 260 outlets, which cover about 55% of the population. Interestingly, its expansion plans sound very Domino's-esque. Mr. Reid wants to use digital technology to make Pizza Hut more of a delivery business. That means outlets don't need to be in prime real estate locations. Already the average delivery time has fallen from 49 minutes to 31 minutes, and the group will reduce by 50% the number of pizzas on offer. Apparently 80% of sales come from just 5 pizza styles. Now remember, Domino's has spent much time and energy over the last decade and introduced plenty of technology to get pizzas to customers faster. Its average delivery time is well below that of most of its rivals. So maybe it's just a case of mimicking the market leader. It certainly sounds that way.
Look, I know it's all about delivery, but you know what I miss? The dine-in Pizza Hut restaurants with the all-you-can-eat pizza bar.
I agree with that. Did you know what the 2 top-selling pizzas are from Pizza Hut?
No.
Have a guess.
Supreme and Meat Lovers.
So close. Super Supreme and pepperoni.
Really? Oh, there you go.
There you go.
Normally you teach me something about commodities, but today you've taught me something about pizza.
Pizza toppings.
While we're on the subject of pizzas, Domino's share price was up a fair bit yesterday. Why was that?
Well, it jumped 4%. It's a stock that did really well during lockdowns because everyone ordered in, but it had fallen back the last couple of months. With the Omicron scare, investors were back buying Domino's shares on the theory that people might be back buying Domino's pizzas.
We've spoken regularly about sectors that have done well out of COVID, and sometimes it's actually taken the companies themselves by surprise. And you've got another example of that one today.
Yes, I love these stories. Cleaning products have done really, really well. Now, I've got the Australian to thank for this story. Sales of household and personal hygiene products such as Dettol, Glen 20 and Airwick, as well as dishwasher tablet brand Finish, have soared since the beginning of the pandemic. Global owner of the brands, Reckitt, has had to triple the size of its e-commerce team and double its digital marketing team in Australia to handle the growth. Now, the group sells about $500 million worth of products each year in Australia and believes achieving 50% of sales online is possible. Just one of those stories which I love, the unintended consequences of a pandemic.
Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that the Prudential Regulator has introduced new rules for lenders that makes it less profitable to lend to property investors and mortgage customers who only make interest repayments by requiring banks to hold more capital against these loans. The Fin is also saying a decline in coal production and emission reductions in the electricity sector have contributed to Australia's greenhouse gas emissions decreasing by 2.1% in the year to June.
Running through some of the other stories around today, tech group Nui said it was aware of a second class action filed against it last week, though it has not been served or had any contact from the plaintiff or lawyers. Last week, Shine Lawyers launched a claim alleging shareholders were misled about forecast revenues.
Yeah, Nui is certainly a company under fire at the moment. Now, Michael, have you noticed how expensive petrol prices are at the moment?
It is a little hard to avoid, Sean. Yes, I have.
It is. Well, the Australian Institute of Petroleum says that pump prices have hit all-time highs in Hobart and Melbourne. Both are at 179 cents a litre, and also an all-time high in Brisbane at 185.5 cents a litre. Petrol prices in Sydney are also on the way up. The good news is that the price of Brent crude fell over the weekend by 10%. That should bring some relief, but I've got to say I've looked into petrol prices before and they're a mystery to me.
They certainly are. Now, Sean, ANZ said it will start offering relief packages to people hit by floods after recent rains. Customers in New South Wales and also in Queensland will be offered the support.
The corporate watchdog will be reviewed by a body set up to assess the performance of Australia's regulators. The Financial Regulator Assessment Authority is a child of the Hayne Royal Commission and chaired by former Macquarie Group CEO Nicholas Moore. Its first review will be into ASIC. It's a watchdog for the watchdogs.
And Sean, finally, Spark Infrastructure is no more, with its shares being suspended yesterday after final court approval for its $5.2 billion takeover by a consortium led by Kohlberg, Kravis, Roberts & Co. and the Ontario Teachers Pension Plan Board. Okay, what's the key overseas news this morning, Sean?
Michael, the World Tourism Organization, which is part of the United Nations, said global tourism will lose $1 trillion this year because of the COVID-19 pandemic. The group called the sector's recovery fragile and slow, and international tourist arrivals this year will be up to 75% lower than back in 2019. Japan has become one of the first nations to effectively ban travellers due to the Omicron variant of the coronavirus. Yesterday, it said it will halt entry by foreign business people and students. Foreign tourists are already banned. Japan only began lifting some restrictions just 3 weeks ago. And finally, Michael, a story which I don't really want to think about too much, given I'm closer to being old than I am to being young. China is set to make more nappies for adults than babies. by 2025. According to the Financial Times, the ageing of the population in China, it's expected to have 365 million people over the age of 65 by 2050, means consumer goods makers have had to rethink strategies. And with the infants category barely growing and the adult category rising quickly, the nappy crossover could be just 4 years away. Don't laugh at this, Michael. Take this seriously. In fact, some estimates put the China incontinence market in 2030 at $16 billion compared to just 5% of that last year. Something to think about.
Well, that story was never actually supposed to get out, but somehow it leaked.
Let's go.
Up next, Sean, is the Daily Interview, and today you are speaking to Virgin Australia CEO Jane Herdlicker. This is a terrific chat.
Yeah, she's very open about what it's been like over the last 18 months running the airline during the pandemic, what it's been like not being a listed company. I think she quite appreciated that. And you know, how hard she had to work to keep her people engaged and part of the process. Really, really interesting. Impressive woman, Jane Herdlicker.
Yeah, absolutely. You can find that interview up next in the Fear and Greed playlist or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Tuesday, the 30th of November, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.